Mr. Mohit Gang, co-founder and CEO of Moneyfront. Thank you for joining us here on News 9, Mohit. I want to begin by asking about the inflation data. I mean, it's due to come out both in India and US today. Do you think any surprises on the negative side, especially in the US, could be the tipping point for equities? Because the markets both here and there, they are looking rather exhausted. In US, the tech rally seems to have slowed down a bit. For us, there are cracks that are starting to show in the broader markets and the PSU names. What's your sense of things, sir?
Hi, Suyash. Morning. Always a pleasure to be on your show. Look, so I think you're perfectly right when you say markets are neither here nor there. Honestly, I think markets are trying to find its feet, and perhaps sometimes no news is also not a good news for the markets, and which is what is happening right now. I think markets are looking for an anchor or a trigger, either ways. US Feb CPI data to be released today should be a good indicator of how things could move on from here. Jan CPI was around 0.39% if I'm not wrong, and which was fairly hot from markets perspective, which means inflation is not showing signs of cool down, and Feb is expected to be at around 0.3. So I think, look, if that persists, if the inflationary pressures persist, then perhaps that's an indicator for the markets that Fed might not cut rates as soon as what the market is anticipating, and that's not the greatest of news which market is hoping for. So still hopeful, and let's watch out the data tonight. So I think only post which we can figure out which way the markets will head in terms of that news item. In India, closer to home, honestly, I think we've been talking a lot about it that the leadership should and ideally is moving to large caps now, and moving away from mid and small caps, where I think the regulators and RBI both are equally showing some signs of cautiousness and throwing some what do you say throwing some signs to the market and to the industry bodies that they need to somehow curtail the mid and small cap froth or bubble or whatever you might just want to call it, perhaps the extra vigor which the mid and small cap segments have shown last year and have run up quite a bit. So my sense is that regulatory intervention in terms of doing a liquidity analysis on the mid and small cap funds in the market, some notes of caution which RBI has thrown on particular NBFCs in the market, and some news flows around some operators who were operating out of Middle East, and all those kind of news flows have all come together, which
Right.
is kind of keeping the markets where it is. Markets, to be very honest, the headline market hasn't corrected a lot. It's just that the mid and small cap segments, the underlying stocks have seen huge beating. If you go down the ladder, you will figure out there is a lot of bloodbath which is happening, especially in the SME segment and the smaller cap stocks. And even the small cap index, if you see, is almost down 8% from its peak levels. So my sense is that leadership is switching in the market. Market is finding its anchor in the safer, larger blue chip stocks, the heavyweight names, and which will perhaps continue for some time. The only good sign I see in the market is that the leadership is again moving to Bank Nifty. After
Right.
a long, long while, I think the BankX is something which is leading the market, and which to my mind is a good trigger. So honestly, I think we'll have to wait for the data. Right now, the market is neither here nor there, and we'll have to perhaps wait for the next trigger.
All right, and you're certainly right in saying that the voices of caution, especially in the broader markets, they are getting louder to a point that even the the regulator, AMFI and SEBI, they are concerned. So far, I mean, the small cap index, as you rightly pointed out, they have taken a beating, but the mid cap index has been relatively insulated. I think it's down about 2.5% from its recent peak, pretty much in line with what Nifty has done. I mean, apart from today's recovery, the index was also down about 1.5% from its record high levels. But we also have this stress test result of small and mid cap funds, which will come out on Friday. And for the benefit of our viewers, this test is basically done to show how quickly these funds can, liquidate. I mean, Mohit, coming to you, perhaps the market will likely be on the edge, considering that this stress test results will come out on Friday, right?
Look, I think there is some news which is already out in the market. If you check social media handles, you'll find certain handles who have already posted some results on stress testing, though those are done by independent advisors or maybe independent agencies. And perhaps what SEBI puts out will have much more weight in the market domain. But my sense is it is not a unknown kind of a thing that small caps stocks and small cap schemes have a lot of liquidity challenge given the depth of the Indian markets, right? So I think investors are fairly aware of it and cognizant of the fact that it is not very easy to redeem positions or sell small cap holdings in times of crisis, and which is fairly factored in. Yes, small cap stress test will throw focus and light on few schemes which have this high illiquidity quotient. I don't think so. Beyond that, it should matter much. But yeah, I think what has happened, Suyesh, is it has thrown the doors of caution open in the market. Till now, only few of industry experts and media were kind of giving those caution notes that small cap and mid cap is a little frothy. But now with regulators joining it, with MFI joining it, with too much of stress test happening, is the noise is increasing, and perhaps that is good from the market's perspective, because investors have to be a little cautious in those segments, and especially the SME segments and all those kind of micro cap segments. Those are extremely volatile, and it's a good thing by the regulator that they are checking in much earlier, so as to avoid any kind of catastrophe in the market.
Good morning, Mohit. I'll drive your attention to the tyre space, which has been in the news of late, with the government extending the countervailing duty on new unused pneumatic radial tyres by a month up to July 23rd, 2024. This duty had been imposed for a period of 5 years in the year 2029, June 2019. And that has been extended by a period of the month. The countervailing duty basically was imposed to offset the price impact of the significant foreign component of subsidies that on products and goods in this space. Now, price cuts have happened over time in quite a few spaces in this. In the truck, bus and radial tyre space, the cuts have been as much as 500 rupees and 800 rupees per pair. And for companies like Apollo, JK and MRF. Now, but when I look at the stocks in this space, not any of them have reacted in the positive today in the last few days. All of them are in the negative. MRF is down even today. So is the case with JK Tyre. So is this case with Apollo. Do you see the government giving more incentives to this industry, or do they need more incentives in the times to come, going by how the stocks are performing despite this news?
Hi Amit, morning. Look, so I think extension of 1 month doesn't mean too much for the industry per se. My sense is government is just trying and extending the timeline till such time that the new government is fully in place and operational, and perhaps that's when we might see larger measures or maybe more extension of this countervailing duty, if at all it were to come. My sense is yes, certain segments of this industry still needs protection against cheaper imports, especially I think the 16 rim tires or radials as we call them. So I think that is one segment which needs a lot of protection, and perhaps I think government will take due measures only post the new formation or post the elections is my sense, and that's why this 1 month extension. Coming to the sector per se, I think price cuts is not something which has happened just now. I think last year towards the fag end, perhaps near about Diwali, also there were price cuts which happened from both Apollo and JK, and I think MRF also, if I'm not wrong. And again, 1 to 2% price cuts have happened for both Apollo and JK tires again, right? So my sense is obviously industry is taking, or the market is taking note of the price cuts which are happening. Perhaps there's a price war which is out there, and the margins are shrinking. Look, to be very honest, if you're doing continuous price cuts, I think the margins are under pressure, and which is what market is kind of factoring in. My sense is one should just wait and watch till about elections to get into this segment or to this sector, and look out for new measures which perhaps government might announce after the new formation of the government. Till then, I think it's a wait and watch scenario for me.
All right, and Mohit, as we speak, RK Swami has listed at a premium of about 13.2% at rupees 288 per share on the NSE versus the issue price of rupees 250. The listing is pretty much on the expected lines. The market was expecting a 8 to 10% premium. Is this a stock that one should hold for the long term?
Okay, Suyash, I am not sure. I thought RK Swami was under some pressure in the morning listing, but perhaps maybe I haven't checked the prices right now. But my sense is, look, this is a very, very competitive industry. Though they are a old brand name, they are into this media game for a fairly long while. But my sense is it's a
Come
very,
on,
very cluttered
louder.
industry
Let's bring
with
the
lot of
song louder.
with with lot of marginal players, smaller players, always trying and chipping in. Their client list is very marquee, and that's a signal of their industry standing and their industry vintage. But honestly, I'm not very gung ho about this segment. I still think there are a lot of new creative ideas floating around, a lot of new media agencies, a lot of new advertising agencies coming up every now and then, and a lot of new. A lot of disruption happening overall in this segment. So it's not something which I understand very intensely, but my sense is a very cluttered, inorganic market, and too complicated for one to figure out who will stand out in the long run. However, RK Swami is a long name, as I said, but again, if I'm not wrong, this is mostly an OFS. So out there also, I'm not very kicked in terms of the overall way the IPOs come out, and the valuations also looked extremely expensive. So my sense is I'm not a big fan of this space and this name per se.
Mohit, RK Swami is the first big name in the advertising space, and they are calling themselves a marketing agency now and not an advertising agency after they broke up with BBDO. Do you see, and they have had at least had a premium listing. Now, do you see other big names coming into the stock market listing themselves as in the West? No big names in the advertising space are listed in the stock markets right now. There used to be Pressman, but that has also moved its business to PR and other things. So, do you see RK Swami starting a trend with bigger names like maybe Rediffusion, Everest, and maybe even JWT India listing themselves in the stock markets in India in the times to come?
Well, look, I think it'll be fantastic for the industry if we have more listed comparisons and listed peer groups. As I said, the industry is massive and huge. There are multiple players who are operating, and many of which we would not even know, Amit, as to their financials and the way they have been operating. There are good niche players I know of who have been doing some fantastic works with at huge scale, right? And when we call off marquee clients, also look, I think Amit and Suyash, the problem in this industry is that when you say, okay, let's say HUL, Nestle, Apollo, whatever, Sun Pharma, Reddy's, these are the client names. Now, those are clients of all the firms. So with the bigger names like HULs and the bigger FMCGs of the world, what they do is they will have five, six, eight, nine different agencies doing different kinds of work. So it's not that they're limiting their work to RK Swami itself or to JWT itself or whatever, right? So they will have contacts and relationships across the board, and they will keep weighing on across different agencies, and plus they have so many brands that each brand kind of figures out its own marketing agency and works accordingly. So my sense is the industry is very cluttered. It'll be great if we have more listed players and more listed comparison to actually figure out what is the kind of profitability and long-term orientation of the industry. As of now, as I said, it's too complicated for me to differentiate a player from the other. Perhaps if we have five, six listed names, that comparison will become easy.
All right, and Mohit, before we let you go, two mainboard IPOs will hit the street this week. Popular Vehicles, which opens today at a price band of 280 to 295 per share, and Crystal Integrated Services that opens on March 14th at 680 to 715 per share. I mean, between the two, anything that you like?
Again, very complex and very different kinds of things. Look, Crystal has some peers already there. You have Cascorp, you have Questcorp, you have SIS, and you have few other players who are listed. So that's a known space, but the business is very widespread, integrated services. The good part about Crystal is they have some government projects, and they have almost like 77 odd % revenue coming out of government things. They work for metros, they work for railways. But again, I'm not pretty sure in terms of valuations at which it has come in and the long-term prospects, given that there are a few other players in the industry and few unorganized ones also competing for that pie. But one thing is for sure, that pie is about to increase in this country massively, right? So if you are banking on a long term cyclical thing that pie will increase and perhaps all players will benefit, then yes. But I'm still not able to decide which one will be the market leader, or which one or two names will lead the market on that space. As with regards Popular, it's only the second listing on the distributor side in the in the vehicle market. Look, so I think India has a 4 million kind of a passenger vehicle market. Perhaps will move to 8 million in next 3 4 years. Popular commands a good market share out there, and I think good part about that is the promoters seem quite focused on services, the servicing of the entire vehicle space, but they're totally concentrated right now on the Kerala market. They're trying to expand to other states and states per se, yet to be tested on that ground. But if you compare this one with the US markets, I think the space is fairly large out there. The biggest player, listed player in US, is about, if I'm not wrong, about almost $25 billion or something in size, and all these players are almost less than a billion. Today. So my sense is there's a lot of space for this segment also to grow. But again, time will tell as to how many new players will get listed. There are no dearth of distributors. I think there are around 2,500 odd distributors, if I'm not wrong, by the last count in this country. So only two have got listed thus far, or two are the second one is now going out for listing. So again, there are too many players out there. Very difficult to distinguish who will actually capture the imagination of the market. But the way they are working out popular, I think it looks good. They will also repay some portion of the debt with the proceeds, and that augurs very well for the financials of the company. So my sense is, with a very, very long-term view, yes, again, I think this is something which will come up big time in this country.
All right. Thank you for joining us here on News 9, Mohit. Always a pleasure speaking with you.
Thank you.